And I would simply say to you that you pull the suppression, the Western suppression, out of the price of gold and silver, it will go higher than anyone thinks possible. And I think ultimately that's what happens, is that you see the Shanghai exchange or some exchange like that in Dubai or Moscow or wherever it may be, or in coordination, these exchanges reprice gold and silver. Not only would it reliquefy their countries the way Roosevelt did in 33 and get their balance sheet in order, but they're the ones who produce it all, accumulate it all, and they obviously see the importance of it.
Under regulations set forth by Basel III, allocated gold is slated to be categorized as a Tier 1 asset, maintaining its zero-risk weighting. Andy Schectman, CEO of Miles Franklin, underscores the significance of this classification, noting that gold is esteemed as a Tier 1 asset akin to US dollars and treasuries, thereby attributing to its high value. Throughout history, gold and silver have been regarded as tangible assets with intrinsic worth, serving as reliable stores of value to preserve purchasing power. Amidst the volatility of fiat currencies, the stability and widespread acceptance of precious metals offer a means to safeguard wealth over extended periods. Schectman asserts that silver currently stands as one of the most undervalued assets on a global scale, presenting a compelling investment opportunity. He points to historical instances where exchanging silver for gold resulted in substantial gains, citing a successful trade in 2010. Renowned author Robert Kiyosaki, known for Rich Dad, Poor Dad, echoes Schectman's sentiments regarding the undervaluation of silver. Kiyosaki emphasizes Schectman's assertion that silver represents the most undervalued asset of a generation, concurring with his perspective. In a tweet reported by Benzinga in 2022, Kiyosaki revealed his commitment to silver, stating, "To profit from the crash of the US dollar, I bought many more US silver buffalo rounds. Silver is a bargain." Schectman delves into the potential for gold and silver to undergo substantial revaluation, particularly in scenarios where Western efforts to suppress prices are alleviated. To uphold confidence in the US dollar, there is a necessity to suppress the price of gold. This suppression mechanism operates as long as the market continues to equate paper gold with physical gold, thereby exerting downward pressure on the dollar price of gold due to the influx of synthetic paper. Join us as we explore the insights shared by Andy Schectman. Stay updated by subscribing to our channel and activating notifications.
If I had only one trade to make, only one, I'd buy gold. And I know that's not what you or your listeners want to hear, but it's because it's the only other Tier 1 asset on the planet, and the biggest money in the world knows it. However, with that being said, I believe that silver is the most undervalued asset on the planet and probably the best investment I've ever seen in my career. And if I had two trades to make, I would load up on silver with the intention of trading a good portion of it into gold when that ratio corrects. Playing that ratio game is something that I've done before successfully. In 2010, it was 85 to 1. It was the second time in human history it ever been that high. I told people, sell your gold right now and buy silver. And within 7 months, you had 37 to 1, just below its 200-year average of roughly 42 to 1. That was over a double with no risk in 7 months and no money outlaid. When you get stretched to these levels, you're talking, this has happened less than a fraction of a percent in all of human history. And we are in anomaly territory. And when I look at what's made me successful, amongst other things, at least in terms of trades over the years, it's been by identifying and exploiting price and economic anomalies. This is one of them. So I would say to people, you'd be smart to sell a good portion of your gold. Don't sell it all. You don't have to go all in, but sell a good portion of your gold, trade it into silver, ride that silver ratio back to just reaching its average of the last 100 years of 42 to 1. You're still 6 times higher than it's coming out of the ground at. And when you see these distortions and you see the amount of accumulation by the big money around the world, at some point that ratio, that mining ratio, has to come into focus. It has to, because the geologic numbers have to come into play. I don't think gold is undervalued. It's the dollar that's or gold is overvalued. It's the dollar that's overvalued. And I would simply say to you that you pull the suppression, the Western suppression, out of the price of gold and silver, it will go higher than anyone thinks possible. And I think ultimately that's what happens, is that you see the Shanghai exchange or some exchange like that in Dubai or Moscow or wherever it may be, or in coordination, these exchanges reprice gold and silver. Not only would it reliquefy their countries the way Roosevelt did in 33 and get their balance sheet in order, but they're the ones who produce it all, accumulate it all, and they obviously see the importance of it. So to revalue it, yeah, I think you could see that ratio massively swing in the other direction. Guys like Big Swears say it's going to go, single digit, and maybe even silver move ahead of gold in terms of that ratio. Now, that, as crazy as that sounds, look, it's coming out of the ground at 7-1, and it's disappearing in nature. It was 16-1 for a very long time. So if you can own an asset that's priced at 90-1, but is being produced at 7-1, I mean, that's 12 times, 13 times nearly um, undervalued. And so, yeah, it's one of these deals where I think you look at the asymmetrical proposition, you have very little downside in that and massive upside. So I think it's as good of an investment from every metric as I can find. And I would tell people, yes, trade your silver to gold, but when that ratio snaps back, give serious thought of trading some of your silver, not all of it, back into gold, increasing what you could otherwise have bought today or increasing what you started with. So the mistake a lot of people make is doing all or nothing. It doesn't have to be all or nothing, but you should own some silver always. And you should also own some gold. I would not count it out as the asset that the BIS, the most sophisticated bank in the world, tells us is tier one. Next to US dollars and treasuries, that's the only other one. So yeah, it's significant, and I wouldn't count it out, but I wouldn't go all or nothing either.
Andy highlights the frustration many silver speculators feel due to the counterintuitive nature of silver pricing, noting that this frustration has caused some to capitulate, abandoning their silver investments. According to a report by the Silver Institute, silver physical investment is expected to decline by 6%, reaching a 4-year low, with the United States experiencing the bulk of these losses. This trend is largely influenced by solid economic growth and continued gains in the U.S. stock market. These factors contribute to waning investor interest in precious metal coins and bars overall. Andy advises investors to take a step back and consider silver's historical context and strategic importance. They advocate for patience, especially for younger investors, emphasizing that time is on the side of those who choose to invest in silver, with the potential for price increases over the long term. Silver showed signs of resilience during Thursday's trading session despite these short-term challenges, with the $22 level proving to be a significant support zone. Observers continue to closely monitor this level as a key market sentiment indicator. Let's get back to the interview.
I think the common mistake that you would see is natural. When you go through several years of a structural supply deficit in silver, we've talked about this before, 200 million ounces short. It doesn't even take into account the military-industrial complex, which you and I have talked about a lot. I had a gentleman in Vancouver come up to me who works on the Patriot missile, said, yes, there is that amount of silver in it, and that's just one form of munitions. How about all the missiles, and how about all the high-tech weaponry? And there's a big deficit, and people understand that. It's needed in solar panels. It's needed in green and digital technology. It's experienced some monetary renaissance, and you have all of these silver speculators who are watching the counterintuitive nature of the metal and becoming, or the pricing of the metal, and becoming more and more frustrated, and many have capitulated. That's the biggest mistake, because the big rise that everyone expects that attracted them in the first place, to me, is getting much closer when you realize that there are people capitulating. That's exactly what they want to see. And at the same time, you have a country like India who, imports 400 million ounces of silver, rather, off of places like the COMEX over the last 2 years. It's twice as much as we see on COMEX, where over the last week, 5.5 million silver ounces were delivered off of COMEX. Little by little, they are draining, where 350 million ounces have come off of COMEX in the last 2.5 years. And so the big money is using the price, suppression of price, and the emotions, the emotions that get in the way of logical thinking in this respect, to drain the systems. And yeah, I think that the biggest mistake people could make is buying silver to become wealthy,
Hmm.
because it increases the frustration when you see things that are counterintuitive the way they are. When you buy it as wealth and take a step back and look at the big picture, the historical context, the need for silver, which is strategic, not just industrial. Time is on your side, hopefully, if you're young enough to realize that, yeah, it's just a matter of time. If you own it as wealth and understand exactly what is happening and that there is that potential for it to really take off, it makes it a whole lot easier. But if you buy it simply to get wealthy, you better have proper time frame, and you better understand that, yeah, you probably have a decent chance of doing well in it, but it will be counterintuitive. It won't be easy. And for a lot of people, they don't have what it takes to hang on, and they capitulate. And that's, to me, as I was saying earlier, when you see structural deficits the way we have been for years, when you see such bullish, silver bullish friendly news, and it goes the other way, you get people that get frustrated and capitulate. And these are the people that bought it for a reason, for this moonshot reason. And when they're the ones finally letting go, it tells me from a contrarian viewpoint that we're getting closer to that moment, as does the actions of what's happening on the Shanghai Metals Exchange and the LBMA and the importing by India. And all of these things tell me we're getting that much closer. But when it happens is anyone's guess. Mathematically and logically, it will happen. Don't know when, don't know how, but yeah, I think we're on our way to much higher prices, and maybe substantially so. What triggers it? How fast does it go? When does it happen? Those are all the what ifs, but I think there's a greater chance of the what ifs happening than the what if not.
Amidst the intricate dynamics of the silver market, the specter of an impending silver shortage looms large. Despite price-setting mechanisms on the COMEX silver market, the fundamental principle of supply and demand is poised to assert its dominance. As we edge closer to a genuine silver supply shortage, the true potential of the silver market lies in wait, poised to reshape the dynamics of price determination and propel silver to unprecedented heights. That's all from us. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.